When people think about Blackline, they think about record to report, finance and accounting, financial close. One of the things, again, that might not come top of mind when you think about finance and accounting priorities is the idea of revenue, driving revenue, and sort of managing the overall revenue cycle, right? So I want to get into this topic of sort of revenue cycle management, why it's important, and the impacts that we can have if we're focusing time where it really should be spent, right?
Well, as you're talking about sort of the initial Blackline, perspective, you have financial close management. Those are reconciliations to close the books. What we're talking about here now is really data set reconciliation, paying attention to all the volumes of data in a revenue cycle, regardless of your industry. There's an enormous amount of reconciliation that has to happen in order for you to bill and collect and apply those cash payments properly.
Yeah, and just to further define what we're talking about here, when we say revenue cycle management, when we talk about solid order to cash processes, ultimately what we're referring to, what we're getting at is getting paid for what we're doing. So if we think about this idea of maximizing profit, right, or limiting the amount of write-downs, dilution items that are going to take away from that gross to net revenue, or close that gap really between gross and net revenue, there's a number of reasons why companies fail to collect on what they do.
So the question becomes, what is getting in the way? And it's generally speaking, just an enormously high volume of transactions. That's basically the root cause of a lot of these problems. So you factor in the fact that something's just not being reconciled, and then when it is, because it's so high volume, a lot of errors. And what does that result in? At the highest level, it results in the fact that you have no idea what your global cash positions are.
I saw in a recent EY study that on average, companies can expect 1 to 5% of leakage, revenue leakage, that ultimately impacts EBITDA, right? Their bottom line, when they don't prevent these revenue issues. I was looking again, doing some research about top ways to prevent revenue leakage and revenue dilution, and 3 of the top things were reducing manual effort, right? Getting rid of the human impact and the human data entry, data reconciliation issues. That was one of them. Another that we haven't really talked about yet here is this idea of visibility and reporting. Being able to focus on exceptions, to be able to find leading indicators, to be able to look at trends and understand, are there particular customers that are driving some of these issues?
Here's the thing. You're now embedded in the go-to-market strategy as an accountant, right? You're talking about now trend lines that help people on the back end of the go-to-market strategy figure out, what are we doing with our consumers? What are the trends? What are the markets that are performing or underperforming, and why? How can you leverage all that information and data? Well, now an accountant can come out from that back office and start working using their analytic mind to actually help drive a go-to-market strategy. What could be better than that? There's nothing more exciting than if for a person that wants to contribute to the performance of an organization to participate in at least some way in the revenue cycle, because that is the performance of the organization, right?